the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors and companies to watch. But as always, a quick recap of some key movements on the SGX. While Singapore shares down at the open as regional markets traded mixed after US President Donald Trump on Friday threatened tariffs on Apple. Now, in early trade, the Straits Times Index was down 0.1% at 3,878 points after some 31.4 million securities changed hands in the broader market. Now let's take you through the closing numbers. The STI closed down 0.18% at 3,875 points. In terms of value turnover, that's 751 million Sing dollars. Gainers trailed losers 220 versus 268. Top advances for today we've got for you GMH USD, SGX and Takrao. And top decliners we've got here Yangzijiang Shipbuilding, Chinese Yuan, DBS and OCBC. Now, in terms of companies to watch, we have SETS because the in-flight caterer on Friday reported net profit of 38.7 million Sing dollars for the 3 months ended March, gaining 18.3% from the corresponding year-ago period. In the meantime, from Trump's potential levies on Apple and other smartphone makers to him delaying tariffs on the EU, we've got more global trade news in focus. And joining me on the line on a Monday is David Kuo, co-founder of The Smart Investor. Mr. Kuo, welcome back.
Hello, good afternoon. Have I been somewhere, Tian Tian?
Well, you will be going somewhere, isn't it? Okay.
So you can't say welcome back just yet, can you? You can say welcome back after I come back.
Welcome back to the show. You are here every Monday. Welcome back to the show.
Okay. Right.
Okay.
What are we talking about today?
The U.S. this time around, in the latest trade war salvo, Trump announced this potential levies of 25% for iPhones made out of the U.S. via a Friday social media post, before extending the tariff threats to a broader range of smartphone makers, players including Samsung Electronics. And Trump said the levies would kick in by end of June. How is the region reacting to the news then?
You know, Tian Tian, there's something very strange about this because he first of all said he was going to levy a 25% tariff on iPhones made outside of America that are being brought into America. And consequently, the market was a bit concerned. But I don't think Apple is really that concerned. I think what is going on with a lot of companies now is, even in the case of Apple, I can imagine, if I was a fly on the wall in the executive C-suites over at Apple, I presume they're saying, right, if we move our manufacturing to America, how much will it cost us to produce the iPhone? And there are lots of estimates out there that say that it could cost double what it is now. So I think in the case of Apple, what they're saying is, right, if it's going to cost us 25% more to bring the goods in from outside, why do we need to manufacture in America? We'll continue to manufacture either in India or in China, which was our strategy quite a while back, and we will just import the phones into America. And the poor American consumers will have to pay 25% more. I think in the interim, there will be a little bit of concern. So the likes of Foxconn, Hon Hai, I mean, that company, I think, will be a little bit, shareholders in those companies will be a little bit concerned. But I think in the long run, what Apple is saying is, I can't make it any cheaper than what it is now. So if I move it to America, it's going to cost the American consumers double what they're paying. So they're going to have to stomach and suck it up and pay the 25% more, because that is a tariff that is being imposed by their own government.
Okay. In the meantime, we talk about tariff threats on one end. On the other hand, Trump said he has agreed to extend the deadline for trade talks with the EU until the 9th of July, after the head of the EU executive body, Ursula von der Leyen, said the bloc needed more time to reach a good deal. Now, Trump had said last Friday that he was not satisfied with the pace of trade talks with the EU. He threatened to put 50% tariffs on all EU goods from the 1st of June. What do you make of the U-turn? I mean, his 90-day window for trade talks, that's supposed to end on the 9th of July anyway, isn't it?
Yeah. I think, this shows the lack of understanding that Donald Trump has about Europe. Europe is not one country. It's not as though you are talking to China or India or any other country. You are talking to a bloc, and that bloc is made up of many countries. And whatever is decided by the European Union has to be agreed upon by all the various member states. And so you cannot expect to snap your finger and hope that the European Union will fall in line. They have to talk with a lot of people. So it is not really sort of that surprising that he has to extend the deadline. And Ursula von der Leyen is saying that, right, we're not dragging our feet. We're just talking to people. This is how things are done in the real world.
Yeah.
And so they've got a bit of an extension. But I think the European Union will probably stand firm and say that if you're going to slap tariffs on us, then we're going to slap tariffs on American goods coming into Europe. So I think it will be fit for that, and then we'll have to see how that pans out. And I suspect that Donald Trump will probably back down, just as he has backed down so many times before. And I think, this seems to be his playbook, and it just goes to show how disconnected I think the American trade body is at the moment. They really don't know what they're doing. It's a joke. It's a farce.
How far did that U-turn, though, reduce the pessimism we are seeing in regional markets today, as far as Asia is concerned?
I think to some extent, Tian Tian, if you have a look at Singapore, what happened in Singapore was that the market was kind of bifurcated. So what we had was the REITs doing reasonably well. They were on the front foot, and then we had the banks on the back foot slightly. And that would seem to suggest that maybe they're sort of reading into this dial back by the American administration with its tariffs on Europe as being less inflationary. So therefore, if there is less inflation in the system or smaller amounts of inflation in the system, then that could be good for central banks not having to raise interest rates. And that, again, is good for the REIT. So as per the conversations that you and I have week after week, I look at the market and I just think, right, what's going up, what's going down? If the banks go down, it means that interest rates are probably not going to go up. And it means that inflation is kind of under control. And conversely, if the interest rates don't go up, it means that it's good for the real estate investment trust, the REITs.
So I was about to ask you about movements regarding STI today, but since you have more or less addressed the movers, the question then is, going forward, do you think market participants will treat Trump's comments equally seriously as they did previously in the previous months?
Well, you said you're not going to talk about the STI, but I want to talk about the STI.
Sure.
Yeah, I want to talk about it because, quite frankly, you cannot invest like this, Tian Tian. You cannot go on a day-by-day basis and say, I don't think interest rates are going to go up, so therefore I'm going to go and sink my money into REITs. If you keep on flip-flopping like that, you're going to end up losing a lot of money, particularly now when there is so much uncertainty in the market. So you really have to look forward to the next 3 or 5 years, or in my case, forever, and say that, am I invested in good stocks? Am I invested in good banks? If they are down today, does it mean that I'm wrong? No, it doesn't mean that I'm wrong. It just means that, the market thinks that interest rates are not going to go up, so therefore that could be not great for the banks. And I think that is where you need to invest. You need to look at the long term and make sure that you're invested in good companies, because time is a friend of the good company. It's the enemy of the mediocre company. And as long as you're invested in good companies, you'll be fine, Ken.
Okay, now talking about companies, some of the companies to watch today included SETS, because the in-flight caterer on Friday reported net profit of 38.7 million Sing dollars for the 3 months ended March, gaining 18.3% from the corresponding year-ago period. How far are the numbers within your expectations?
Pretty much so. And I am a shareholder in SATS, and I'm quite pleased with the performance at the moment. I mean, SATS has got two businesses. It's got the gateway services, which does freight forwarding and all the various other things, moving parcels and packages from one place to another. And it's also got food services. And both those divisions did exceptionally well. Food services, because people are traveling again. I can't believe we're still talking about COVID now, but there are people who are traveling again, and so consequently the food services side of SATS is doing very well. And then the gateway services. That one could be a little bit harder to predict because if you have a look at the last 3 months, presumably there were some importers over in America who were trying to front-run the tariffs and trying to get goods into America as quickly as possible before the tariffs start to land And so that was actually sort of quite good for freight forwarders such as that. But I think over the long term, SAT has got such a big global business now that it's not just goods going from here into either Europe or America. We're talking about trade within ASEAN itself, trade within Asia, North Asia, South Asia. And so I'm not really too worried about what's going on with SAT. During COVID, they made a big acquisition as far as the freight forwarding service is concerned, and I think that is beginning to play out now. We shareholders had to suffer for a bit because there were no dividends, but I think the dividends are going to come back in a strong way, and I think shareholders will be rewarded, Tian Tian.
Okay, now from SETS, I do want to talk about ramen, Ajisen Ramen, in particular Japan Foods, the parent company, because the restaurant operator yesterday reported this loss of 6.2 million Sing dollars for the second half year ended March 2025, that is, sinking further into the red from a loss of some 576,000 Sing dollars in the year-ago period. Any thoughts on that?
Yeah, definitely. When you talk about food, I have a lot of thoughts about food.
I know it. I knew it.
No, Tian Tian, have you been out and had a look at restaurants at the moment? They're not doing that great.
Yes.
And when Japan Food comes out and says that consumers are feeling a bit cautious, they're feeling a bit worried, and they're not going out spending money on dining out, it doesn't really surprise me a great deal. But for a company like Japan Foods, they have overheads. They have to pay rent. They have to pay their staff. The food side of it is a variable cost. When there are more people, they have to buy more food. When there are fewer people eating, they buy fewer inventories in. But ultimately, it is the overhead. It is the staffing cost and the rental, and that is what is hurting many of these restaurant operators. Not just Japan Foods. Just have a look, and I'm sure there are lots of restaurant operators who are in the same position right now, and they're just saying, what do we do now? When my lease is up for renewal, do I renew my lease and cut my losses, or do I continue and hope that the next 3 years are going to be better? And I think it is a very difficult time for restaurant operators, not just Japan Foods, even the likes of McDonald's and KFC. I mean, all of them are suffering at the moment because of this uncertainty that is hanging over the heads of consumers.
Okay, now if you're just tuning in, we're now in conversation with David Kuo, co-founder of The Smart Investor. Mr. Kuo, if we could stay in Singapore, Singapore's manufacturing output gained 5.9% year-on-year in April, slipping from the previous month's upwardly revised 6.8% growth. Now, despite growth being slower in April, the latest print more than doubled the median 2.5% expansion forecast by private sector economists in a Bloomberg poll. What do you make of the numbers, given the impact of Trump's tariffs on major global economies? Have the impact of those tariffs hit, the numbers yet?
Not quite.
Yeah.
And there are two things to take away from this. First of all, the manufacturing output has slowed slightly. It hasn't slowed to such an extent that it's a worry yet, but I think it could very well be if it continues to slow. But Singapore has many manufacturing sectors itself. So hopefully whatever is weak in one sector will be taken up by some strength in others. But the other thing is, I really take my hat off to these economists who dare to actually make some forecasts at the moment. Because when I listen to some of the company reports that are coming out, even companies are withdrawing their guidances at the moment. Many companies are saying, I cannot tell you what the profit for the rest of this year is going to be because I just don't know. And I think, that is going to be very much the case with everything that is going to happen. We were talking about the restaurant operators. Ask the restaurateur, is this going to be good in the next 6 months? He'll say, I don't know. And I think the same is going on with many of these economists. They are trying their best to make a forecast, and in this particular case, they lowballed it slightly, and the number came up better than expected. But I think in general, it is going to be very difficult to forecast anything, Tian, at the moment because of the uncertainty over the Trump tariffs.
Okay. Now, further away, Mr. Kuo, before I let you go, OpenAI said today that it will set up its first office in Seoul and that it has establish an entity in South Korea. That is, of course, as demand in the country jumps for its ChatGPT service. What do you make of the move given the uncertainties in the global economy? Is this the time now for tech firms, not just OpenAI, the likes of Alibaba as well, to expand their operations and their linkages in Asia instead?
I think the genie is out of the bottle now, Tian Tian. I think OpenAI, ChatGPT, whatever you want to call it, I think it is here to stay. And increasingly, more people are going to become more reliant on artificial intelligence, whether it is to read annual reports or whether it is to do their homework. Increasingly, more people are going to be relying on AI. And as a result of that, companies like ChatGPT, they need partnerships. They need deals with many other companies because they cannot do it themselves. I mean, the costs are phenomenal. So what will happen, I think, is that we're going to be seeing increasingly more deals like this. I mean, right now it is South Korea because I think there is huge demand for AI in South Korea. But eventually it will be deals with many other countries and many other companies because AI is here to stay, sadly.
Okay, thanks so much.
One day I will be replaced by a artificial intelligence robot, and it'll just be an avatar talking to you because the avatar will know what I'm going to be saying, even if I don't.
The smart robotic investor. Okay, thanks so much, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor, and we hope we'll still have the human him doing the interviews in future.
I hope so too. Thank you, Tian Tian.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.